Have you ever wondered why so many really revolutionary blockchain ideas just fizzle out before they even get started? Well, a lot of the time, it boils down to this one incredibly expensive, incredibly difficult problem: security. But what if you could just rent security? The same way you rent server space from Amazon. Okay, let's get into this, because that is the powerful, game-changing idea behind EigenLayer.
So, here's what we're going to break down in this explainer. We're going to start with that core problem I just mentioned, the security bottleneck. Then, we'll dive right into EigenLayer's amazing solution, which is shared security. After that, we'll look at how it actually rewards people for participating, the business revolution it's already kicking off, and finally, we'll take a really honest look at the risks and, of course, the massive opportunities ahead.
All right, so let's dive into our first section, the security bottleneck. You can seriously think of this as the innovator's dilemma for the entire Web3 world. And it really all comes down to this one question. Why is it so incredibly hard to launch a new decentralized application? Let me tell you, it is not for a lack of brilliant ideas. The real issue is the monumental, almost impossible task of building trust and security from absolute zero.
I mean, just think about it for a second. To get a new network off the ground, first you have to find and recruit a whole new army of validators. Then you have to go out and raise a ton of capital for them to stake, which is kind of like a security deposit. And even after all that, you still have to convince a skeptical world that your brand new, totally unproven network is actually trustworthy. It's a ridiculously high wall to climb, and it just ends up stifling so much innovation.
And that, right there, brings us to section 2. This is where EigenLayer steps in with its incredibly elegant solution, a whole new way of thinking they call shared security. This right here, this is the core analogy that makes it all just click. Before Amazon Web Services, if you wanted to launch a website, you had to go out and buy your own expensive physical servers and manage them yourself. It was a huge upfront cost. Then AWS came along and completely changed the game by letting you just rent computing power. Well, EigenLayer is doing the exact same thing, but for blockchain security.
So, the big question is, how do they actually pull this off? Well, it's all thanks to this brilliant new mechanism called restaking. Now, in the simplest terms, it lets people who are already staking their ETH to help secure the Ethereum network to at the same time use that exact same stake to secure other new applications as well.
And this slide just lays out the difference perfectly. With traditional staking, your staked ETH has one job, and one job only: secure Ethereum. That's it. But with restaking, man, that same capital is now doing double, triple, or even quadruple duty. It's securing Ethereum plus a whole bunch of other new applications that plug into the shared security model. We're talking about a massive leap in how efficiently we can use capital.
And this quote from Dr. Anya Sharma just nails it. She calls staked ETH a multi-purpose security primitive. That is such a powerful idea. It's not just some asset sitting there earning a bit of yield for doing one thing. It's now a fundamental building block of security that can be deployed all across the ecosystem. It's a total game changer.
Okay, so that brings us to our third section. Let's look at how this all comes together to build a real, thriving ecosystem by rewarding the people who are actively participating.
So these applications that are actually tapping into this pool of shared security, they have a specific name. They're called actively validated services, or AVSs for short. You can think of them as the customers in this new marketplace, renting top-tier security from the Ethereum network through EigenLayer.
And the variety of AVSs is just incredible. We're talking about really crucial pieces of internet infrastructure here. Things like decentralized oracles that bring real-world data onto the blockchain, or cross-chain bridges that let you move assets from one network to another. In the old world, every single one of these would have had to build its own security from the ground up. Now, with EigenLayer, they just don't have to.
So you've got these AVSs, and they're renting security. Great, but how do you make sure the people providing that security, the restakers, are properly incentivized? Well, to solve that, EigenLayer rolled out a really key upgrade: programmatic token emissions. It's basically a much smarter way to hand out rewards, making sure they go to the people who are actually doing the work.
So why is this such a big deal? Well, for starters, it targets the incentives directly at the people who are actively securing these different AVSs, rewarding the most important contributions. This gets everyone's long-term interests on the same page. It also creates this virtuous cycle that fuels sustainable growth, and it helps the participants themselves by giving them much clearer and more predictable revenue streams.
And as the analyst Michael Chen points out here, this isn't just some small update. It's really a sign of the project growing up.
It's moving past those early, let's just get this thing off the ground mechanics and into a really refined, sustainable economic engine that's built to last. It's all about creating real, long-term utility.
And all of this leads us straight into our fourth section, the business revolution. I mean, how does all this cool tech actually translate into real-world impact for businesses?
This table just lays it out so clearly. The absolute biggest advantage is that it dramatically reduces the cost of trust. And what that means, in simple terms, is that the barrier to entry for new Web3 startups just got way, way lower. This in turn speeds up digital transformation because great ideas can be deployed so much faster. For the financial world, it opens up a whole new universe of yield generation and investment strategies. And because of all this, it's creating completely new business models out of thin air. We're already seeing an entire industry of restaking as a service providers pop up.
And this isn't just some abstract theory. You've got enterprise leaders like Sarah Jenkins who see this as a fundamental leap forward. Reducing that trust cost is an absolute game changer for big businesses that have wanted to build on the blockchain but have been totally put off by the insane security overhead.
Okay, finally, let's talk about Section 5. Because look, no new technology comes without challenges. So it's super important to understand both the incredible opportunities and the very real risks on the road ahead.
So on the one hand, the opportunity is massive. EigenLayer could truly unlock a new wave of innovation, make the whole ecosystem way more efficient, and basically turn Ethereum's rock-solid security into a public good for all of Web3. But there are challenges. For the stakers providing that security, there's something called slashing risk. Basically, it means if they mess up while securing a new application, they can actually lose some of their original staked ETH as a penalty. It's a classic case of bigger risk for a bigger reward. And there's also an ongoing debate about potential centralization, if a few huge players end up dominating the restaking market. These are serious things the community is going to have to manage really carefully. Which leaves us with this one final, really powerful question. By making robust, decentralized security something that is actually accessible and affordable, EigenLayer is proposing a fundamental shift in how we build things online. So is this model of renting security the key, the actual key, that will finally unlock the next evolution of the internet? The groundwork is being laid right now, and the answer to that question is going to shape the entire future of decentralized technology.